The storm is here. We've been here before. Late cycle euphoria, parabolic pumps, or the anticipation of parabolic pumps, and calls that this time is different. And maybe this time is different, but until this time is different, it's not different. We're going to be going over the potential top that we're staring down for the crypto market that is rapidly approaching, and some time frames here, some previous lessons learned, and some interesting documentation as well. So bear with me and yeah, buckle up. So I want to pull up kind of the total market cap of crypto. I want to pull up Bitcoin's market cap. I'm going to pull up total crypto market cap, excluding Bitcoin and a couple of others. Before I do that, I wanted to just briefly go over these two documents, maybe like 2 minutes here. This is Decrypting Crypto, How to Estimate International Stablecoin Flows. I always just find it interesting, some of the big behemoth institutions globally and what they're kind of looking at or tracking, or what rhetoric or verbiage is being kind of spewed out. This is the IMF, the International Monetary Fund, and they basically talk about stablecoin flows. We're seeing obviously stablecoins all across the board here. So analyzing 2024 stablecoin transactions totaling $2 trillion. And they're finding that the highest flows are in North America for about $633 billion, and in Asia Pacific, $519 billion. Relative to GDP or gross domestic product, they are the most significant in Latin America and the Caribbean, and Africa and the Middle East. So there's longer 55-page doc here, just talking about the overall quantities of kind of stablecoin flows in 2024. It's interesting, around 2 trillion. And then I found a City Institute podcast. This is, I think it's an individual from CFTC. So yeah, this is Caroline Pham, acting chairman at the CFTC, and Ronit Ghose, the global head, future of finance at City Institute. And again, getting into stable coins. This is where and this is kind of why I'm prefacing this stuff as far as where we could be at potentially right now in this cycle, and really what I'm looking for in this cycle, and then what I'm planning to do, like, leading into 2028 and 2029. So this is Caroline Pham saying that she regulates the $700 trillion notional global derivatives markets through the CFTC and other. You need to post margin and collateral every single day in vast quantities in order for capital markets and other financial markets around the world to actually function. No matter what asset class it is, whether it's foreign exchange, rates, commodities, equities, credit, all of these asset classes, you need to be able to settle it with a cash leg or some type of asset. So when you combine the efficiencies and the benefits of this new technology, blockchain technology, with the need to be able to settle and to be able to settle at the same time, or atomic settlements, right? Because the banking system doesn't move at the same speed as, for example, what we can do in our modern day equities markets with high frequency and algorithmic trading. So this stuff should just lead you to understand kind of where we're heading. They're already talking, like, right now there's a lot of kind of faster payments initiatives that are kind of at, they always use like the verbiage of like T+3, which is like 3 days for settlement, or T+2, which is 2 days for settlement, or getting down to T+1, so 1 day, and then T+0, which is essentially just atomic settlement. And she's literally saying here that no matter what asset class, foreign exchange, rates, commodities, equities, credit, all these asset classes, you need to be able to settle it with a cash leg or with some type of asset, and combining the efficiencies of blockchain and distributed ledger to be able to do so. And obviously the near future, they're already doing this, which she also goes on to say, which I was pretty fascinated with. What people don't realize, number one, tokenization is real. I recently gave remarks where I noted that the size of institutional repo and payments on blockchain is currently over $1.5 trillion. It might be a conservative number, actually, and that's real. That's a real number, 1.5 trillion. And because it's institutional, all of that 1.5 trillion was done under banking supervision or some type of regulatory supervision. And so this idea that it's a free-for-all, crypto markets and crypto's a scam and it's a free-for-all and it's all nothing, she's saying it's just not true. Because how could you get to that 1.5 trillion if you didn't have the regulations that went hand in hand to do so? And the thing that I think is interesting with this is we look at tokenization and how many tokenized real world assets there are right now. And it's like 22.5 billion, excluding stable coins. That's probably a little low. I'm using like RWA XYZ's numbers there. And then we look at where it's going. I personally believe that like the next cycle was kind of really the cycle that we see an impact of like tokenization on what networks are going to flush out, like 2028, 2029 timeframe, because it's the same timeframe that we see Treasury borrowing an advisory committee that has individuals like JP Morgan and BlackRock and Citigroup and all these huge bigwig banking, top 1% of 1% of people in the world, saying that we could see a 2.8 or $3 trillion stablecoin market cap by 2028. And you've got obviously CFTC basically saying that 1.5 trillion conservative number for tokenization. What's going to come down the pipeline for tokenization? All this stuff. So I don't know. I find this stuff kind of fascinating. And like we know with the Genius Act and stablecoin legislation, it's kind of like opening. It's like a real foot in the door. I mean, shit. A couple of days ago, we literally just saw BNY Mellon being the custodian for Ripple USD or RL USD. I mean, you don't really get any bigger than the largest global custodian banking entity by, I think they have like 20% of the world's assets or something like that. BNY Mellon is like ridiculously massive, custodying Ripple USD at this point. So it's just like, I don't know, the writing's kind of on the wall where this is going. Speaking of Ripple, just did a couple of targeted searches. I don't know if anybody's seen this, but it's interesting that the discussions they're in. This document came out maybe 4 or 5 days ago. This is from the European Banking Authority. They had to disclose meetings with European Banking Authority staff members, with stakeholders. So, parties that are kind of in the mix in the first quarter of 2025 on January 28th, 2025. And for any of the sleuths out there that still like to go and deep dive into some of the tweets, which I'm not going to waste my time and do, but more power to you. January 28th, the Digital Finance Unit, Innovation, Conduct, and Consumer Department at the European Banking Authority met with Ripple to talk MiCAR, so regulations. And on March 24th, the Digital Finance Unit, Innovation, Conduct, and Consumer Department met with Ripple for an update on the progress of Ripple USD issuance in the European Union. So I found that interesting, just a disclosure document coming out of the European Banking Authority. All right, let me see. How do I want to even start this? I'll preface by saying, obviously, none of this stuff is financial advice. Most of the stuff anybody tells you, including me, is not going to be right. I will say a couple of things. So I've been in this space since late 2016. I've been here long enough to see the 2016 cycle, the 2020 cycle, this cycle, or 2021 cycle, I should say, top, and then this cycle that we're seeing right now. So this is the third kind of go around the merry-go-round here. And you do start to, as you've been in this space for a little bit longer, and I'm sure most people, maybe most people are the same way as I am. I don't want to make assumptions, but I don't really look at prices or any of that stuff 95, 98% of the time at this point when I'm being in crypto. Like I don't pull up and look at CoinMarketCap. I don't look at individual cryptos that I may hold, any of that stuff. What I do recommend doing, and I strongly suggest every single person that is in this space needs to have a plan that they can totally remove emotion away from and that works for them. Because when markets start to take off, and I've had these same dates legitimately, and you could go back and probably find older videos where I have this same chart pulled up from like a year, even 2 years, 2.5 years ago, probably. I've had this September to October 2025 timeframe literally on this same chart that I've showed in multiple videos. And this is something that I put together, I think this was like 2020, maybe 2020, somewhere around 2020. I put this together, this whole thing. What I basically did is I tried to do like a time study and it wasn't just time. And I know that I'm going to probably get a lot of comments. I'm not a TA guy. I'll preface that. Certainly not a TA guy. I never said that I was. But I tried just doing a simple time study for me that kind of made sense. And what I did is I looked at the halvings of Bitcoin, and I tracked prior to when bottoms historically come in, and then post halving, or when mining rewards get cut in half, when tops potentially came in. And I found something interesting, and it's every top after the halving happened either 11 to 12 months after the halving, or there was potentially an additional kind of double top 17 months. So either 11 to 12 months or 17 months. This kind of led me to this September, October. I also did like percent drawdowns and stuff like that. And I'll preface and say, you know, you should never expect to get anything totally right. But I do know in 2021, I think it was 2021, or maybe it was like 2020. It might have been 2020. Anyways, there was, I like studied all of this stuff, did percent drawdowns, and I like pretty much caught the bottom of the market in, I want to say it was 2022. I think that was the time frame that everything was kind of bottoming, because yeah, October 2021 is right here. I think I ended up picking up a lot of crypto in like June of 2022, and then again in November. But anyways, it's interesting that I have this kind of pulled up, and I'm not saying that this shakes out. I'm not saying like this September to October type thing. It might not. I could totally be wrong. Maybe markets just continue to take off. Maybe they don't. But what I want to say is, like, obviously Bitcoin's at all-time high. You can literally pull it up. Take a look at Bitcoin where it's at right now. 119,735 is what it has potentially hit, you know, this month. You could go to the weekly or daily and probably get a little bit closer and more accurate. But the total crypto market, like with alts, are lagging behind. Obviously, this is total crypto market cap, excluding Bitcoin. Obviously not at all-time high market cap. So we're a little bit behind. You can see the same thing with just a total crypto market cap, including Bitcoin, basically battling all-time high right now, but really excluding Bitcoin, because, you know, unless you're just purely holding Bitcoin, or unless you're holding Bitcoin and then you're rotating out into alts, and I don't trade, so I don't do any of that stuff. I normally just buy and hold. Really, you're kind of looking for everything excluding Bitcoin to start battling. I don't know, let's say 1.44 trillion, then let's say 1.5 trillion, and then really the all-time high, so 1.7 trillion. And hopefully we start seeing that stuff turn around. And we start seeing an all-time high for total market cap, excluding Bitcoin. Once, you know, from prior experience, you know, without getting into all this different random charts, once crypto starts taking off, it becomes very hard to like maintain any sort of sanity. Whenever I made that plan back in, you know, 2020 or whenever it was, and ended up buying in like 2022, I pretty much just bought in June and then again in November of 2022. Like I ended up, one asset, for example, that I bought Quant at $40, right? Or $41 or something like that. And you know, what ends up happening is like a ton of people just end up like freaking out at where the markets are potentially at. So like, yeah, here's Quant dipping down to, I literally bought Quant right around here, right around like $42, $43, which was wild that I bought, because I bought Quant back in the day at $3, but I only bought like 20 Quant. So it's like really wasn't like a whole lot to write home about. But I bought Quant again at $40. And, you know, if you make a plan, like the whole point of this is like, number one, like I've had people ask me about Bitcoin and stuff like over the past 6 months to 9 months. And my suggestion has always been over the past 6 to 9 months with like crypto in general is just, now's not the time to be making entry points into crypto, because Bitcoin had already broken all-time high. Then it was kind of correcting and consolidating and doing all the things it does. And now it's broken all-time high again. You're going to see a lot of people trying to catch on to hype, because now on Twitter, you look on Twitter and you see this, oh, Bitcoin's going to break $250,000 and all this stuff. And hey, maybe that happens, and amazing if that happens. That's awesome. But I'm certainly not going to, this is me personally, I'm certainly not going to be putting like, number one, I don't have the massive amounts of capital to be dumping into crypto. Maybe some people do, and they're willing to kind of gamble a little bit. But, I've always been the type of person, like, especially recently and being in the, a couple of cycles, like I would rather pick something up when I feel like it's, number one, when it hurts to buy, because you should really feel sick when you're actually getting into crypto. Again, this is just my thoughts, not financial advice. Like when Quant was at $41 in June of 2022, I remember back in May, June of 2022, and then again in November of 2022, everybody said the markets were going way freaking lower. And they didn't. Through this time study that I did with Bitcoin and through kind of I also did this is frozen now, but I also did percent drawdowns on Bitcoin, like with moving average crosses to kind of figure out when things kind of historically bottomed. I think it was I'm probably going to get this messed up, but I think it was the 21 and 50 crossing. And then I want to say it was a 58% drawdown that was really consistent over previous cycles. That percent number is probably a little bit off, but that's that along with the time. And I was just if this happens, I'm going to buy digital assets. And I did buy digital assets in 2022 and made those decisions, but it hurt to do it. I literally felt like I'm probably an idiot. Prices are going to go down. It's the same thing on the way up. When these markets start to turn around, I mean, you can look at XRP right now, and it's been consolidating for months. This is the monthly chart. Literally, you've been in consolidation for XRP for 6 months. It looks really eerily similar to the previous market cycles. XRP is kind of a crazy chart, but looks pretty similar to right here, doesn't it? Back what happened in 2017. And then, like I said, look at what happened. You've got one monthly candle that led to the top of XRP in December of 2017. These things take off quick. Your ability to make sound decisions when they do take off, unless we go into some sort of sustained utility market, which I don't believe that we're there yet personally. And I hope that I'm wrong. I don't think that we have the regulations to be there yet. And great, if Bitcoin goes to $250,000, amazing. But I would rather buy when Bitcoin corrects back down to $70,000 or $80,000 again at its next bottom, which I do believe is a possibility. This is frozen. One other interesting thing is if you look at the top of 2018, late 2017, 2018 for Bitcoin, or this is crypto's total market cap. Let me go to Bitcoin. If you look at, why is it giving me OKX? I want Bitstamp. Here's Bitstamp. If you look at the top of, I'll do total crypto market cap again. Yeah, this is better. If you look at the top of crypto, January 2018, you look at kind of what happened after. Obviously, went into a bear market, all that other jazz. We broke through all-time high again. We went and we peaked again in November 2021. Look at where the next cycle bottom was. So after we topped again in 2021, look at where we bottomed in 2022. We bottomed at the top of 2018 and 2022. I would not be surprised if, and it, who knows, could not, maybe it doesn't happen again, but I wouldn't be surprised to see some sort of a crazy run in crypto. Maybe we get up to, you can see some of the levels that I have here based on fibs that are probably drawn incorrectly, and that's great. But I wouldn't be surprised to see us top again at a 3 trillion or bottom at a $3 trillion market cap. Right now, we're sitting at a $3.7 trillion market cap. I wouldn't be surprised to see us go on a run, and sometime in 2026, we end up bottoming right again at 3 trillion, or maybe it's 4 trillion or 5 trillion, who knows? But what I'm saying is these things tend to rhyme. Just be patient. A lot of crypto Twitter will lead you to have the impression that you're going to make millions of dollars and become very, very rich from very, very little amounts of money. And yes, that does happen to some people in this space. But if you try capturing that, and that's your goal, you're basically gambling. You might as well go to a casino. If you prefer more sustainability in this space, I like to say situation changing money is more so what well, at least for me, what I'm would like to accomplish out of being in this space. If I can make small changes to my life, whether it's paying off a car loan or whether it's doing X, Y, and Z. To me, it's much more achievable. And it sets the bar much more reasonable for me to actually make sound goals. Like, everybody in this space should have goals for like when they're literally offloading everything, and maybe your plan is not to offload at all and just to hold. Maybe that is your plan. Great. I mean, if that's your plan, awesome, if you can do that. But I know a lot of people have like kind of teetered in stuff where it's like at this percentage increase or at this fib or at this price level for this asset, I'm going to offload 20% or 30%. If you have stuff written down before stuff gets parabolic, it becomes much easier to follow that when stuff is parabolic, because trust me, when stuff starts taking off in a very short window of time, which we know that these bull markets historically have been in a very short window of time, I mean, very, very short window of time, it is very difficult to make decisions or to keep a level head or any of that stuff. So my suggestion kind of right now is, looking across at stuff, looking at, we can see where Quant's at right now. We can see where, and just pull up any asset that you want. We can see where XDC is at right now, where HBAR is at right now. You can see where XDC and XDC or XRP is doing really well, where XRP is at right now. Before this stuff starts breaking all-time highs or battling all-time highs, while it's kind of still sitting here semi-quiet, we broke our previous low, our monthly low. Hopefully we close above it in July, or this has actually wiped out a couple of monthly lows. Looking at HBAR's chart just as an example, before stuff starts running and taking off, if that's what ends up happening, God, please try to write down a plan, because you do not. I've seen so many people, including myself with some assets, like you'll see so many people in this space, like a month, 2 months, 6 months, 9 months, a year into a bear market being like, I wish I would have sold, and having to sit and wait. And then it doesn't make sense to sell. And they're sitting for another 3 or 4 years because they're either, in the red because they bought at the wrong time, or they're so close to break even that it just doesn't make sense to sell. So yeah, that's it. I mean, try to write down a plan, try to have a plan. I personally don't think that we're in this massive utility bull market yet. And the reason I don't think so is because I still see Ninja Surfboard coin classic getting listed on Coinbase and Kraken and all this other stuff. Like every, 2 hours, we see the next hottest meme coin. I think that there's like a lot of over dilution and oversaturation. I am surprised that we aren't at like a $7 to $10 trillion market cap yet in crypto. So I'm certainly very bullish on this space and where it's going. And I'm saying like this cycle, I wouldn't be surprised that this cycle or even higher this cycle, because when stuff starts taking off, who knows where it's going to go. But do I think that we're in this sustained utility bull market where all traditional systems, turn on distributed ledger? And no, I don't. And I think that we're going to see, more of that, like especially with real world asset tokenization next cycle. I think that once we hit 100 billion tokenized RWAs, excluding stablecoins, we're going to hit 1 trillion RWAs on chain really quick. I don't think it's going to take us. As from getting to nothing to 100 billion in tokenized real world assets. What it takes us to go from 100 billion to 1 trillion. I think it's going to be like incrementally quicker, like exponentially quicker, I should say. And then you really got to think, okay, what networks are these real world assets being tokenized on? Which networks have liquidity for these RWAs to be traded back and forth on, or whatever? And then it's going to get pretty interesting. And then we can start, at least for me, start talking about like utility driven bull markets, which really then doesn't become a utility driven bull market. It just becomes, it's being used and the floor is much higher because it's being used. Like I am looking forward to hopefully the date when we're not seeing, and it's probably always going to happen to some extent, but as more and more money flows into digital assets, distributed ledger technology, you're not going to, I mean, it's why you see, the diminishing returns stuff kind of, you're not going to see like, here's this total crypto market cap excluding Bitcoin. You're not going to see like runs from like $48 million market cap to $700 billion market cap. You're probably going to see more like, 2 trillion to 5 trillion. Like, I don't know. It's going to be interesting to watch all of this stuff, but like these, 1000x ecosystem, like total crypto market cap returns, yeah, maybe we get there at some point, but I don't think it's going to be like these gigantic blow off tops, you know, in 30 years from now. What you're going to see is like, hopefully, a little bit more kind of sustainability with, because the networks are actually being used. Maybe not 30 years. That's probably too far. Hopefully like within a decade. But anyways, I mean, the whole goal of this is just to say, I think that we are probably pretty close to seeing stuff get crazy. Just try to keep a level head. It's really easy not to keep a level head in this space. And yeah, hopefully you guys enjoyed this video. None of it was financial advice. I'm probably wrong on September through October. Maybe we do have a sustained utility market for in perpetuity forever. But, you know, I'm watching kind of the time frames that I've had on this chart for, you know, years, that paired with obviously like price action. Never use like one thing. Like I have the time stuff pulled up and I was just going over it, but never obviously use one thing. You should have multiple things that you're looking at in tandem. Try to make educated decisions, and then like I said, just keep a level head and have a plan. So hope you guys enjoyed this video. I haven't done a Friday video in a very long time, but this market's getting interesting, so I decided I'd do one. I'll talk to you guys. Thanks. Bye.